Good morning, traders. It's 8:01 a.m. Chicago time on the 16th of August, 2022. Welcome to Tuesday, which comes after Monday before Wednesday. This is episode number 2294. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, just diving right into the conversion trading pre-market summary sheet here. We have a market that is mixed this morning. We had some pretty big releases this morning. Retail stocks come out. The giants in the industry, Walmart and Home Depot, came in pretty hot today. These are fall under consumer discretionary specialty retail for Home Depot and consumer staples, food and staples retailing for Walmart. Walmart came in with a whopping $152.9 billion in revenue, beating $150.81 billion, and releasing their earnings at $1.77. The expectation was $1.62. Remember, Walmart, Target, and them had warned that there was a glut of inventory, and yet here we are. Home Depot generated $43.79 billion in revenue versus $43.36 billion, with the earnings at $5.05, beating the expectations by 11 cents, expected at $4.94. Both companies are guiding forward, are maintaining guidance forward, and so giving a bit of a boost to retail stocks and retail stock outlook. So that's the biggest news today. Very, very slow news flow overnight. After the close, we get Agilent Tech and a bunch of others. U.S. building permits comes in stronger this morning. Building permits was expected at 1.67, comes in at 1.674. Housing starts came in weak, expected at 1.57 million units in the U.S., came in at 1.446. As a comparison, housing starts for the prior month was 1.599, almost 1.6. So we see things slowing down. Redfin came out and said that they are seeing buyers backing out. It says Redfin July shows home buyers increasingly backing out of deals as slowing market boosts negotiating power. 63,000 home purchase agreements were called off in July alone. 16% of homes that went under contract in a month, and the highest rate in more than 2 years. 16% of homes that went under contracts in a month. So that's how many. So 16% is the 63,000. That's how many agreements fell through in July. So we got to keep an eye on the housing market there. This is, of course, the largest asset in the world. Other than that, looking at the calendar, there are a bunch of numbers this morning. The unemployment rate out of Great Britain came in at 3.8 in line. Claimant count came in at 2.5, negative 2.5 versus negative 10,000, negative 10.5 thousand. The zoo economic sentiment out of the Eurozone came in at negative 54.9, slightly better than a negative 59. Balanced trade out of the Eurozone came in at a deficit of 24.6 billion, worse than 21.1. But the important German zoo economic sentiment index for August came in better at negative 55.3 versus expected negative 61. Inflation rate out of Canada came in at 7.6 in line, the prior's 8.1. Seeing inflation flattening in Canada. Core inflation in Canada for July came in at 6.1%, in line with 6.1, the prior 6.2, and so on and so forth. Looking forward, we do have a couple numbers here in 10 minutes. We have the API crude oil stock change after the close, and then a slew of numbers out of Japan, as you see in front of you, the most important of which is the balance of trade in Japan for July at 7:50 p.m. if you happen to be trading at that time. Crude sideways has been whipping around. Crude has pushed higher this morning and is coming back off. It's coming back to its full session point of control here towards the $89 mark. So crude's relatively stable this morning after the big sell-off yesterday. Turning our attention to the S&P, the center of the page here. The S&P completely balanced, completely sideways. 143,000 contracts is lower than what we had yesterday. 99% of the overnight inventory is short, meaning 99% of the volume that was traded at price occurred below the prior settlement or close. The range is 16.5 points. That's pretty poor. 16.5 points. Point of control 42.95. The S&P continues to move its overnight point of control higher. The high overnight's 4,300 and a quarter. We've reached this really big station at 4,300. We do have the 200-day simple moving average up at 43.20, but the S&P is really pressed up against what is anticipated to be the high end when we project earnings forward in 2023. So, we've been expecting this thing to stall out. The structure beneath us is not all that strong. Here's what was expected yesterday. This is from yesterday's Trader Bite. Expected it to push towards the 62, 63, and potentially 67. Give that up and move towards 40. That's what I was looking for yesterday. I was completely wrong. Scenario 1 did not play out at all. The secondary scenario did. We pulled back just a hair. We could not. We actually pushed immediately off the low. Did not have a pullback, but we had an impulse immediately on the open, almost immediately on the open. This impulse that I highlighted yesterday occurred early on. So we anticipate a push right into that 67, and then we're looking for the 90 and the double O. Yesterday, the high was 43.02, something like that, 43.05. What was the high yesterday? 43.0475. So yesterday was a lot more bullish than I had anticipated. Here's what things actually looked like yesterday. There's I talked about how we moved from balance and then we started to kind of run away with this big ass gap underneath, giving us a relatively weak structure. And then the profiles above there have relatively weak structure. They're kind of running away in haste. If we look at this left side, the right side is crude. If we look at the left side, there's the balance from the beginning of August, and then we break higher. We start to run away higher low, higher low, higher low, higher low on a daily, which means that the market is one time framing up on the daily. So the trend continues higher, and call me anticipating, but I have to trade what's in front of me intraday, but I'm expecting to see some sort of a B-shaped profile, a fat bottom, so that can start us moving towards repairing some of the structures down into the 42.40 that I talked about yesterday and the 42.35, and then potentially working itself back to repairing the gap into 41.50 and ultimately 41.20, which is the balance from May, June. That's not happening yet. It is still quite strong. You have to kind of sit through a relatively decent amount of grinding for this thing to go up. So yesterday we had a multi-distribution profile, double distribution profile, and we finished at the highs. We broke just one side of the IB. Pretty healthy movement overall. Looking at it on a short-term basis, here's what it looked like. We came in. So this is a trader bite here, right here. This is where we did our scenarios. This is the 67 that was talked about. And then here's the 62, 63 during the trader bite. And the idea was that, it seemed to be appropriate to look at scenario 2, but scenario 2 triggered off right at the end of the trader bite. We dropped right off, and then we took it all the way back. Look at this. This is a driving behavior right off the open here. Took it right back, went above the VWAP, full session VWAP, full session mid, and held those for a continuation higher. We ended up taking out the prior session high, which was at 82.75. We put in an IB at 84 right here, and then we were just stuck in the middle with you. Terrible singer. So we got stuck in the middle. There was not much. So from this point onwards, right here, about 9:30 Central onwards, there was nothing to comment on for quite some time until we finally catch this, have this break higher, and we get a small pullback, not quite to the IB high, for a run into the close. Let me tell you, folks, this is just not my kind of trading. I just do not like this kind of trading where we're just grinding higher and higher and higher and higher. Never been good at it. Never going to be good at it, probably. So it's let's reset. So to me, it's a tough trade yesterday. Didn't really trade. I was in crude most of the day yesterday. Ended up catching a short early, which was relatively decent, and then took 2 full stop outs, maybe 3 full stop outs. I don't remember. All I remember is I was complaining a lot to the poor people at Convergent who are looking at my comments. But I ended up catching the sell-off in the afternoon, which kind of took me out of being pretty decently down for the session to basically flat. So yesterday was not a very fruitful day, a first day back from my short break. So here it is, upper distribution, lower distribution, and then the overnight session was all in the upper distribution this morning. Okay, so let's bring that to the fore. What is that? In options. So what we've done this morning is we've held on to this upper distribution. We've had a lower high in the overnight session. We've had a point of control that is at 42.95. We're trading below the point of control. And overall, just nondescript. We've had a low. This morning's low is coincidental with yesterday's 84, right? So this low this morning is at 83.75. The overnight low is 83.75. The IB high from yesterday, 84 even, 42.84 even. So this kind of resistance turns support for today's session. Again, completely balanced profile, and we're holding sideways. And what this means is that we are very likely to sit here and trade sideways on the open today. It is a coin toss. Whether we move straight down from here or straight up, it's really a coin toss. It's holding on to some pretty decent levels. It may shift itself down into that 62 area potentially. But overall, we've tested the 4,300, and I think we're likely to today. We're more likely to test lower, in my opinion. And I know I've said that for the last two sessions and it hasn't done it, but the overnight action is very poor, so I'm expecting a very, very quiet open. I'm not going to speculate which way this is likely to go. We do have higher lows in one-time framing, higher pretty consistently, and therefore I have to go with what the one-time framing says. But overall, expect it to be relatively choppy this morning on the open. I'm suspecting that it's likely to test down, consolidate, and then push into that 43.20 area before we might get some real selling. I don't really know. I'm going to sit and watch this morning to see what it's likely to do. I don't see signs yet that it's, if we look at the relative delta, we've got the cumulative delta following the large lots. We've got small and very large lots above the zero line. This could get dragged either way. The small lots could take over. So this is all about sitting and waiting and watching what it does this morning. I would not want you to commit to either side. Just make sure you have some sort of a price map. These stock zones, make sure you have some sort of a price map to trade off of if it does move away. In other words, on the downside, if it moves lower, looking at this 62, 67 area. If it's above, we're going to look at yesterday's high. We're going to look at the 43.20. If it dips below that, we're looking at 42.50. If it cannot hold the 42.50, we're looking at this 47, and then we're back to 42.35, which is the composite for this area, the composite point of control. That would be the main target, 35 down below. So again, 20 above, 04, and so on and so forth. 67, 55, 47, 35. And let's let it test one level at a time. Again, there's a line right in here as we start this morning. Boop at 84, 82.75, 83.75. We'll see how that gets treated. And what if we break below, how does it treat it from below? If it holds, then we are likely to go for yesterday's low and end the one-time framing up. Okay, that's all I'm going to give you today. Good luck, and I will catch you tomorrow. Don't forget to hit the like and the subscribe buttons on YouTube. I will catch you soon. I'll catch you tomorrow. Hopefully you have a great day. Take care.